Good morning, traders, and welcome to the Bookmap All Markets webinar. This is Bruce at Bookmap. Good morning, traders. We're going to go through the order flow in Bookmap today and look at whatever instruments you guys want. That's why it's the All Markets webinar in Bookmap here today. Anyway, my name is Bruce. I'll be your host. This is for every Monday, Tuesday, and Friday at 10 a.m. East Coast time. This is a foundational class in order flow, and then we have many educators that on top of that, trading a variety of different markets, a variety of different styles every day. So let me take you to the Learning Center in Bookmap. You can go to bookmap.com, click on the More button here, and then go to Learning Center right here. You'll see all sorts of videos in here about getting connected, Bookmap connected, getting started, how to use Bookmap. There's a market mechanics course in here that will provide an excellent foundation on understanding how markets actually work. We have different order flow phenomena videos and add-ons and insights. And then underneath here, very proud of this, we have, I don't know, 18 or 19 streamers in here now. Every day we have a full calendar here of streamers. So today is Tuesday, the 25th. You can see that earlier this morning we had Oliver Sparring going over the markets in German. Here's this webinar here, All Markets. After this, we have Tom B, market profile trader for futures. We have crypto. We have a few different crypto traders in here today. We have, just today we have, it is Crypto Lifer at 1 to 2 p.m. Then we have Patrick in Brazilian Portuguese. We also have options with Doug at 1:30 p.m. East Coast time. And then at 2:30 p.m. until the close, we have the Algo Boys, right? Trading their futures proprietary methods. All right, so anyway, a host of traders. It's great to have this, and they're all Bookmap traders at a high level. You can reach out to me at Bookmap on Bookmap's Discord, Bruce at Bookmap. Let's go through the disclosures and then jump in. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, it's important to know the disclosures and that this is for education only. All right. This will provide you a really nice foundation, and it is a starting point. From this and some of the ideas presented here, go back and prove me wrong, or study it and prove it right, that some of these ideas work. That's when you're going to become a professional trader. You're going to have a trading plan. You're going to know your odds, and then it comes down to trade management. There's really only two things you need to do. You need to know you have an edge, and you need to trade it correctly. That's it. Right? So if you can do those two things, then you can make a living trading. Right? So we'll go through many different ways of trading in here and many different markets. Okay, so what do we see today? Well, here's the cash open. Boom, move to the upside. Where? High liquidity, 45.90. There's a stop run above 45.90. It's verified here. This is just data. This is information. It is verified. This is a stop run up and through here. Not all are stops, but many are. It's the biggest on the chart. And then did this accept? It traded into and through 45.90. Did it accept? Absolutely not. It rejected. And it came back down, and look, it retested 45.90. Did it have enough? Did the traders in this auction, did they have enough buying pressure or interest to trade higher? No, they didn't. So what has price done? Well, it has traded back down to a previous area where it broke out from down here. Okay, we can draw up the market structure. And market structure is giving us insight to the majority of the traders in these time frames. Okay, so we can see the market structure all over the place. All right, now this market structure in here, in fact, let me just get it a little bit cleaner in here. Okay, this is where it broke out here. Okay, and then you can see that this is the high liquidity, but it broke out here. This was the big stop run, and then it retested this little area here. It rejected, and then it came back into this area here, retested, and now where did it go? It went back down to here. Okay. Now it's retesting back up here. Okay, now let's read it right now. What's happening right now in this market structure? We're going to read the volume and the heat map. Okay, well, where's the liquidity? Liquidity is way up here, 92, 93. Do we have aggressors in here? Green dots, market buy and sell. Market buy orders are the green dots, market sell are the red. We have some, okay, but it doesn't look that convincing. So I'm actually looking for sellers to trade it back down into the range here. And maybe back down to about here, 86.5 or so. Okay, just based on what we're viewing here. I don't see high liquidity in here, so there's really no selling interest here. But I don't see a lot of buyers up here. That's what the auction is telling us right now. This is the transactions up here at the top of this market structural range here. We're not seeing too much buying interest. Okay, so we're looking for sellers to trade it back down into previous areas where it transacted before. Right, so and it's already done it. It's down to 87 here. That's as far as we've got, was 87. We still may go lower here, but now we're retesting back up here. And are we fine buying interest? Yeah, a little bit better now, right? Now this is the third retest here. Okay. So now is there enough buying pressure to break this range and trade up to this area right here? Well, so far so good. You can see the buying coming in. Now, how convinced are we by this buying? It's not bad. It's not bad. Maybe it just comes up to about 90, or maybe the swing at 90 and a quarter, 90 and a half. But it's not too convincing either, not yet, but it did break it though. Okay, now what about the order book? Now here we go. All right, now it's much more convincing now that we'll get a test up to here. Okay, there's the buying interest. So we're looking for buyers to take it higher. Okay, what is the order book telling us? We're not getting much out of the order book and the heat map in here in the order flow. There's some, you can see it kind of bluish underneath here. At 89, that's a good sign, and we don't see too much high liquidity until we get back up into like 91 or so. Okay, so it could slop around in here basically. We talked about this yesterday about skews in the order book, and then getting insight from that. Okay, so and we're not getting too much of interest in here. It's just we do see the aggressors; they are coming in. And they are moving price, and we're looking for our target up here to be about 90 and a quarter, and that's it. Okay, now you can see 90 coming in with a little bit of liquidity here on the offer, so there is some supply there. Okay, and we've already tested 90 in fact on this move. All right. Okay, so are we creating a new trading range? Is it accepting above this previous area here? So far, so good. Okay, the sellers just tested it right here, and we found more buyers come back in above. Okay, so we're accepting here within this range right now. Is this clear for people? Is it understandable? Is it simple? Just to understand some of these ideas in here. Okay. And if it's not, we'll zoom in here and we'll make it really easy on a much smaller time frame in the market mechanics, and then we can take it further, and we can start to zoom out and look at more trading activity in the auction process here, and then understand the higher time frame. Thanks, Rob. Yeah, well, I imagine it makes sense to you. You've been with Bookmap for a while now. Good morning, Deborah. I haven't seen you for a while. And are those stacked red areas orders above 45.92? Yes. In the heat map, is very simply in here. Let me show you. The vertical white line, this divides the current market over on the right hand side with the last transactions here. And then the price ladder here, and then this current order book. This is your dome, depth of market. These contracts up here, or shares and stocks or whatever, Bitcoins, these are traders here that are willing to sell to anyone, but at only these price levels. These are limit sell orders. Okay? And these are limit buys down here. And that's all they are. Nothing more than that, right? It's just limit buy and sell. And here's the best bid and offer. Now, everything to the left of the vertical white line is the historical order book or historical price in transactions. Right? So this is high liquidity, exactly. KKP. This is high liquidity up here in these areas. These are limit sell orders. Right? So now, bigger picture. See how we kind of retested. We broke out of that range, retested here, and now we're coming up to test the level that we were looking for. That original kind of knee-jerk reaction here to trade up to here, and it's kind of struggling to get up there. So we need to have a lot more buyers in here to reach that area. If we don't, then we're going to trade back down to here, and we may trade back down into this previous range here of price activity. Okay. Now, if we do get those buyers, and we're starting to show a little bit of interest. It's not very convincing, but they are auctioning here and transacting up here. Okay. Well, and then bigger picture, if we do get the buyers, then this is where they can meet the sellers up here. Okay. And that's about as simple as it can get by the auction process. And we are finding those buyers now. So let's see them trade up into this 92 and 93, 90 to 95, basically. Okay. Now, this is where that keeps it really simple. And we're not suggesting that, it's going to go right to 95 or 93 or 92. We're going to read the process in here. How is it doing it? Well, this isn't very convincing. The volume is good here. Volume is good on the by the aggressors. Okay, they're buying, and they're pretty big volume dots here. But it didn't only move like a point, 4 ticks or so. Well, we want to see both. We want to see strong volume, and we also want to see strong price movement. That will give us a much better insight. Okay, now we may get it here. We'll watch. Do we get strong volume? Yeah, starting to right now. Okay, buyers should be able to lift it to 92.5 or so, because that's where the liquidity is. Okay, so here's we've got some strong volume, pullback, strong volume, and it's being disrupted. Okay, this is still, we would have made the same decision here. Okay, sellers just came in, and this trader here, or these players here, looks like one trader, came in on the offer with supply here, and the market reacted to it. Okay, so now it's rejecting, coming back down into, coming back down to the top of the range that we saw the breakout from. We would have made the same decisions in here, no doubt. Here's why. Strong buying. Okay, now we noted that it was strong buying, but it was only like a point move or so. Okay, pullback followed by strong buying, and they're pulling their liquidity here at 91.5. So due to this activity here, we'd look for more buyers to be able to trade it back up into this liquidity here. Now there's one thing that would have been better to see in here, and this is the skew in the order book that we talked about yesterday. Okay, it's good that they pulled that liquidity here, right? That's good. It would be great to see them add liquidity down here. Okay, maybe even as a spoof. I don't care. It would have helped us, look for that move to unfold up into 92. And we didn't get that, right? Instead, we got the opposite here. Okay, we got this liquidity here, and the reaction to that liquidity here, that supply, these limit sell orders, was we found sellers, right? So, and then let's see where have we gone yet since then. Okay, well, we've just tested back down to basically this where we broke out from earlier, and then it's bounced back up. So anyway, our order flow kind of shifted and changed right here in front of us, right here. Okay, we wanted to see this. We didn't get that. We did get the pulling here, which was great, and we had our aggressors. It auctioned here, so we were still looking for it to go higher. And this was the disruption here. And again, you can see the disruption again here, actually all the way down, and we got it again here. Now, this is getting interesting. Here's the disruption, but look what happened. Okay, we have more buying pressure still. All right, so now let's read this auction process. If we get more buying pressure above and through this liquidity here at 88 and 75, we're looking for, again, buyers to come back up to this swing here, or this liquidity up here that we were looking for previously. So 91.5. Okay, now let's zoom in here and let's read the auction in here. And we know that the high liquidity is up here. Is the aggressor interested? Seems to be so far. A little bit of pulling there, a little bit of adding here on the book, but they're way down here. Okay, still looking for it to unfold up into 95.5 or 91.5. But we would like to see this liquidity up at a little bit higher level here. See how dark it is in here? Okay, what does that mean? It just means there's less liquidity. What does that mean? That selling, aggressive sellers, can take it down here rather quickly. Okay, and then it could bounce back up. It just means that there's not as much liquidity. All right, so let's see here. All right, so there's a little bit of a skew in the auction here. Okay, see underneath here on the bid, and we're getting aggressors. Okay, still looking for 91.5. Let's see if we get a really big skew in the auction here. Would love to see that, and then we can trade up into like maybe 93 and 94. Okay, not just 91.5. Anyway, guys, this is the auction process, and just understanding this context between the buyers and sellers here. Joe, let's see. Good morning. Is it fair to say that price seeked out liquidity? Yeah, you had some great questions yesterday, and we elaborated on the answer in detail about this. So, yeah, I mean, first assumption is the market needs liquidity to trade. Okay, suppose like right in here, there's no liquidity in here. In fact, maybe I should just take a screenshot and then show something here. Okay, let's see. Suppose in here you have the best. Let me just make this bigger. Can I get rid of this? I know I can. Hide. hide recent. There it is. Okay, great. All right, so we have like 15 contracts here, and then we have 136, right? Suppose we just black this out, right? And there's no liquidity in here. And in fact, actually, let's take it even further. From this 15 here, the next level of liquidity is way down here. Okay, so let's suppose that God, let's make it more extreme than that. Let's suppose there's no liquidity in here. Okay, the net on the bid is down here at this 88 level, and we can make this bigger. All right, so there's no liquidity in here. So does the market seek liquidity? Well, actually, if you hit market sell up here, Joe, where are you going to get filled? Good morning, everybody. I'll let you kind of answer for a second, Joe. There's a little bit of delay over there, I know. Good morning, slow down. Sloth, Rob, Stan, excellent. Be reaching out to you guys real soon here. Yeah, you're going to get filled down here, right? You're going to move the market, 2.5 points. If you hit market sell up here, you're going to be slipped basically. Well, you're going to trade wherever the next person is bidding, and they're bidding down here. Okay, so is the market seeking liquidity? Yeah, absolutely. The liquidity is here, right? So in essence, yes, that is correct. Oh, this happens at FOMC, CPI, etc. all the time. Exactly. You get these dark spots. When you start to see that in the market, and you don't know if there's your economic events, you've briefed yourself for the day, but your timed events, you know that it's not during that time, but you see the liquidity start to dry up, like it's time to start, looking at your news streams, and maybe pulling your trade. Okay, because there's some sort of geopolitical tensions out there, and the market doesn't know how to react, right? So people are pulling their liquidity. So anyway, yes, you need the other side of the trade here, and that's what the heat map is showing you here. Okay, so what we're doing and reading the auction here, in answering your question, does the market seek liquidity? Yes, it needs liquidity to trade, but it depends on the aggressors in here, in this context in the aggressors. Okay. Do they trade into it? And do they still have more buying pressure to trade up into these areas up here? That's the question. And looking at this in here, okay, if we just take this away, it looks pretty good. Like I see these guys underneath here. They're starting to pull a bit here. And we had some aggressors here. We have some aggressors in here. I'm looking for the aggressors here at 91, and then to whip it on up into 92, 93, 95, whatever. Okay, and then we're looking at the liquidity, the reaction to this liquidity at 90 right here. And we're also looking at this 91.5, and they're pulling some from there. There was more here, there was more over here. Now there's less. There's more up here at 92. So what does that mean? It's similar to that this dark area that we showed, but the dark area is becoming more kind of in concept is more dark here actually, because they're pulling in here. So this would be the area we'd look for it to go to, is 92. Right? Now it depends. That's really, it's the context here, and I can't think of a better word. It sounds like a cop-out, but it's true. Is there market buying appetite to hit this high liquidity? That is the question, and that's what we're reading in here. And the read would be through this, we would say yes. It looks pretty good. Now we're looking for the move up here. Okay, that's what we see right now. All right, so this was at what, 1022. All right, what happened? Let's take a look. That was at 1022. Okay, all we did was come up into 91.5, almost 92. Okay, and then here we were. All right, so here we were at 1022. Right. Let's try to get it exact. Well, I know it's 1022. It doesn't quite look like it. It was something like this, right? Let's see. 1016 to 1022. All right, here we go. Yeah, so we're somewhere around in here, right? And then we can see that it's starting to auction here. Yeah, we're looking for the move. And they were this is where they were pulling. Yeah, I think this is where we were, somewhere around in here, right? So yeah, we would look for that, and they're pulling up in here. Okay, they're adding in here. Now they're starting to add more here, though. They're not pulling any longer. See how the auction kind of shifted and changed here in the order flow. Okay, now what you can extrapolate and learn from this too is understanding of the context up here. We're looking for the breakout, okay, up into this high liquidity. Now there's more liquidity, and do we find the aggressors? Well, we found some in a 91.5. Now there's even more liquidity up here. Now they're pulling down here at 90. Okay, where's the aggressor here? All right, well, still more aggressors. Okay, that's good. Traded up into there. Okay, adding a little bit here, still up here. Still looks good to me. Like now, let's see if we can get a little bit more at 90.25, and then we should get the move into 91.75. Now we know it didn't play out. Okay, but let's watch the process here. Okay, the auction process here, and the mechanics of the market. Okay, so they added in here, and then they start to pull. Okay, now that was a pretty quick move, and it came back down into this liquidity, and it kind of bumped back up. It could still come up here. We got to get our aggressors back up here at 90. Okay, and here's where it failed. Okay, and you can see, and this is a hard read. And we do know that that the liquidity in here was actually pulled, but the sellers went after it. Okay, yeah, this is a hard read. Could have gone either way in here. And instead we had the sellers come in. Okay, and then where are they going to trade it back down to? Well, high liquidity down here on the bid. Okay, and that's exactly where it went, right? And below the swing here, right? So now that's going to be a huge stop run here, because all these people up in here, they're going to be stopped out down here. Now let's see, does it reject? This can be a stop run and rejection and move back up, and then finally hit this liquidity up here. It might. Okay, so let's go through that scenario. What will that look like in here? Right, well, this is our basically this, we talked about this yesterday, our shift move here, and it just means, we've talked about it for years and years, who's in control, right? However, this is a little different here. It's sellers, but it's a stop run, so we could get buyers back up above here, right? We're going to look for that scenario, and then we're going to look at the order book as well to help us. And then we could come back up into our 92. Okay. This is capitulation here, and maybe there are no more sellers after this. Maybe there's just buying interest after this. That's what we want to read. Okay. Now, however, it being this is what we want to understand. It's either above it and it rejects, or it stays below it and it stays in this new range here. And now let's read the auction in here. Well, here comes a little liquidity at 86. We know there's at 85. What about up here? We're not really getting too much out of it right now. Okay, and what about the aggressors? We're not reading too much out of it either. We don't see any sort of like a definition here. James, very helpful learning on the TOS platform. So you're using TOS. Okay. So now look now, right? Buyers are above it, and there's a pretty clear path now. They're pulling liquidity, and now they're up at 89.50. Okay. Do we get more aggressors? Are they on the bid underneath here? Right? They're down here though. Okay, so we don't have too much clarity. I love that they pulled in here. That looks good. And I love that we got some buyers here. Okay, now I would love to see a little more liquidity underneath here, and I would love to see the buyers up here. Now you can see what just happened. And this is something we simply can never prepare for. Someone just came in and swept the order book, and it's a larger player. Okay, and we're going to turn the stops and icebergs on here and get more understanding of this move here. But this is a larger player just hitting the sell button, okay, for a lot, for hundreds of contracts here. Okay, so in fact, we'll show you exactly what unfolded here. And that's a larger player. There's no doubt about it. It has to be. Iceberg show stops. Okay, looks good. Okay, it's actually not much of a stop run. Okay, it's only 33 contracts. In context, it looks pretty big though. Context of the market, it looks like it's pretty big, and it's not really much of a stop run. All right, so anyway, yeah, this is a much bigger stop run here. Okay, so anyway, like you know, in here we don't know where the stops are, but we know where they got filled and where they transacted. And this is, if you had your stop in here, you're going to get slipped and you're going to get filled down here if it's a stop market, right? Stop loss market order, right? So anyway, the larger player came in here and just hit market sell. They swept the order book. They took all the liquidity all the way down into this 86 and a quarter here. We've seen this move so many times. Look at this. It's really kind of dirty. I guess we can extrapolate meaning out of this though. Like, okay, and it makes perfect sense. If I was a larger player, I would probably do something like this. I'd sweep the order book and then put my icebergs right underneath here. Okay, because I can kind of guarantee myself a fill with my iceberg orders. It's really smart. Here's that iceberg, and it stays in the order book here, and it still stays in here, and it's still in the order book. It's 1,400, almost 1,500 here. There, now it finally transacted and executed. Fully executed iceberg for 1,687 contracts. That's huge. That's a huge iceberg. So here are the market mechanics. And this is where Bookmap really shines. And yeah, sorry, James, like I know the Thinkorswim does not have this. You'll have to get the desktop version for this because they don't have some of the add-ons that we have. I hope that they do develop them in the future, but they'll need to get Rhythmic data as well. Or at least DXFeed will have to offer market by order data. And then they'll need to develop the stops and icebergs indicators. Right? They do not have them, so it's only on the desktop at the moment. Anyway, let's go through the mechanics in here. Now, we're not just talking about order flow here. We're talking about a very specific player in here. And it pretty much has to be one specific player. It could have been others on this iceberg here, but they sweep the order book lower and then they get filled here. What better way to get filled? It's really smart because you're going to, when you sweep the order book like this, usually there's a, what do you call it? Like, see how dark it is here underneath, back up here. So it's kind of like a vacuum because the order book has swept. Now, where is the best offer? It will, a lot of times the best offer will just stay up here at 88. Well, in the S&P, it moves pretty quickly and catches up pretty quickly. It's down here now at 86.5. And that's where the person or the actor put their iceberg order. Okay, so it's not guaranteeing them getting a fill. It could have, gone lower and missed out. But if it's trying to fill back up into this range here, it's kind of like a gap here. And very much so. In fact, it's like a gap. It's filling this area in here. It cannot fill this area in here because there is an iceberg, okay, getting filled. Once that iceberg got filled, look what happened. Then this area filled, right? This whole dark area in here, then price was able to move higher. All right. So there's some great market activity in here to check out. But now let's use this in the bigger picture. Now we understand the players and some of the games that are going on in here. And now let's use this to our advantage to gain some insight. Okay, so we're just going to read the order flow and the transactions. Okay, there's a lot of buying in here. All right, so let's see if can we get more buyers back up to the top of the range? Look at the order book. Looking good. Do we get buyers? The order book's looking great. It would be great if 88.50 kind of pulled a little bit, and they're not. And we need a little bit more buying up here at 88. And then we could get an extended move back up into 89.50 and maybe 91. And let's watch. Here come the buyers. Okay, now it's not much. They're coming in. It is auctioning here at 88.25. Okay. Can they trade into 88.50? Let's see it. There they are. And now do we get a skew in the order book here? Underneath a little bit. Follow it a little bit here. And a little bit of selling here. So coming back into the range. Okay, now be really careful here. Okay, because we know that the larger players down here, they're short. You know that. Yeah, they could have been exiting. That's true. But to me, it appears like they're positioned. And they have another iceberg here. This order flow is getting really interesting here. So quite a bit going on in here. This iceberg they're continuing to add in here. They're also on the bid here too. Okay, pretty dark in here though. So it can slosh around in here basically. All right, anyway, let's go through a couple scenarios. Scenario number one is we trade up here, we get more buyers, we get a skew in the order book, and we're looking for this high liquidity to fill. Scenario number two is we cannot get up here. We see exhaustion. We start to see sellers in here hit the bid into maybe 86.50, and enough selling to break this range to the downside. Okay, and if that happens, what's the next level here? Okay, well, we would look for bottom of this range here at 85, and then potentially it could zoom down into 45.80 as well. I'm going to clear my drawings. We got a lot on the chart here due to the stops and icebergs. Okay, Deborah, I just answered your question. How can I tell that the larger player are short? I don't know. Is the very clean and simple answer. However, I do know that they sold. I do know that they aggressively sold to sweep the order book, and I do know that they got filled with an iceberg here. So they're short basically, or the position is a lot of selling. And now maybe they're covering, right? But it just, if I look at this here, I don't know. I mean, who knows what time frame that maybe they're on? But to me, it would look like if we can get back down below this where they got filled in here, and we see sellers, then we should get a really nice move to the downside. Okay, the flow would be, or not the flow, but the transactions would be a move to the downside. Okay, so let's see if we get it. Here's some exhaustion up here at the top of this range. Now, do we get some selling here at the bottom of the range? Not yet. Let's look for it though. Look at the skew in the order book here at 88. So now we just need some sellers, and let's see these guys get out of the way at the last minute, and we'll come right down to 85. That would be the scenario. We don't see that happening yet. Okay, we do have this liquidity here, and that's about it. We didn't get our sellers, and we didn't get the order book pulled here on the bid. In fact, we're getting the opposite. We're getting very much the opposite. They're pulling here, they're adding here, and we're getting buyers. Okay, so buyers, now I am looking for buyers to take it up to 89.50 now. Again, these are not trade recommendations. It's an order flow reading, and then these are concepts to put into your trading plan. Okay, this should help optimize whatever trading plan you have. Okay, it still looks good to me. I still like the bid. I like the offer. I like the aggressor. Okay, there's our skew again right in here. 88.50. There's our 89.50 is now transacted. It still looks good though. Still looks good to me. So maybe we can get to 91. And that larger player comes in here again. That's another order book sweep here. And stop run. This is where like the information here about individual trading activity can give us some insight here, because a lot of times when you see that order book sweep and then this iceberg, we might get a repeat of that. So that's where we have to be really kind of careful, because they have an interest here in protecting this. Okay, and the scenario in the bigger picture for that larger player. Let me get the stops and icebergs on chart. I'm going to turn it off for now. Okay, so that larger player is in here. Okay, we know that. All right, so we're really kind of, I'm really kind of watching like maybe this here exhausting out and then coming back down here, and if we can get like the big red dots underneath here, That's where we can get a nice move. Okay? And it's in line with the larger player in here. Now, right now, the larger player is just one player, but they had some clout in here, no doubt. Nice, Rob. All right, yeah, you're looking for pull back to your entry. It's looking a little jumbled now to me, to be honest. I don't, boy, it's like I was describing yesterday, like it is the best thing to do is just be really, really objective and humble. What is the market telling me? What is the behavior telling me here? What's a possible scenario, and does it start to play out that way or not? And that's it. Instead of like having some sort of bias, every time that I have a really strong conviction and bias, it is hard to be objective, and kind of made that error yesterday as price went away, and it was like, no, you're still looking for those sellers to come in, and I think it was clearly not the case. Okay, so like right now, well, what do we have? All right, well, we're coming back up here, and now do we find buyers at this little swing? There weren't a whole lot here before. Are there a whole lot now? Not really. Now they might come in, and then we can trade back up to the 91, 92.50. Okay, but right now I don't see them. Okay, and then do we get sellers maybe down here around 88.25? That's a hard read. There's liquidity there coming in at 88.25, and it's starting to transact. All right, so we don't know. We looking for more clarity here, basically. How can I spot trapped sellers? Well, just look at where those transactions take place, and then where would they be kind of caught. So for example, right here, and now we know this is a stop run though too, right? But so that doesn't really mean a trap. And now we don't know how many are, we could know exactly how many are in here, but basically below the swing here, people got stopped out. It's not necessarily trapped. There could be some trapped in here. Okay, and then we're back in this range now. Okay, well then if this is going to be a trapped sellers, where are they going to feel the pain, and where are they going to have to buy, be forced to buy in order to stop the pain? Well, it's likely going to be up in this area. It could be up in this area, up in here. It could be above it. Typically, we look for the kind of stop run above here, basically, just like there's a stop run down below here. So in fact, I mean, you can see what's happening here. There's a little stop run here. There's a little stop run here. There's a little stop run up here, and then like this larger player came in and just moved it away here, stopped some people. And so you can see what's happening. Like at the extremes, we're getting these stops, and that's likely because of the traders in this range here feeling the pain. All right, so here we go. So now another stop run here. And now a stop run, we really have to be understand exactly what it is. It's just traders that we know that these are stop orders that are transacting. Okay, so we think that because it's below the swing, we think that this is not stop to enter short here, that this is a stop loss order to exit the market. Okay, now you get to be kind of careful about stops, because just because there's stops down here, that doesn't mean the market's going to go, all of a sudden way back up here, like, and find buyers. Doesn't mean, it just means that there were stops down here. There might be more sellers down here, and price might accept below this area here. And if so, we're going to get more sellers probably. And we might get price exploration to the downside. Okay, so the stop actually got it outside of the range, and then it accepted outside of the range. And that's typically what happens. And when you get acceptance outside of it. Okay, so now look at this here. We've got a little double bottom. We've got buyers up here. This is looking better now for it to come back into the range and trade into maybe this swing here around 88.25. Okay, can you guys see that? Do you understand the logic behind that? Okay, we have exhaustion here. We have buyers here. Now we're looking for buyers to take this higher. And that's the concept. Okay, now we found some. Now we're finding a little bit more. This is looking now much better. Okay, we need buyers right here at 87. And then we should get the move up into 88. And the order book is starting to show some interest here below our 88 level, whereas previously it was dark in here, right? So this is kind of playing with this whole setup in here, this liquidity in here. Whereas here it was looking pretty good. Okay. So yeah, this play in here, even though we had our exhaustion down here, traded up here, we had some trading, and didn't work out. Okay. But this is something to go back and study. Okay, and it might work out now. Let's watch. Look at the buying coming in now. Okay, so yeah, I like it. I need to see the buying up here at 87. Okay, here we go. Okay, now what does the order book say? Not too good. There's still liquidity here and down here. Yeah, so we want to see this liquidity pulled in here. Okay, and we're not seeing that. Okay, so we got our 87, but we didn't have the order book. Okay, and we're just, again, it's the behavior of the traders. Got to get the order book on our side. Looking better. Now let's see these guys pull this liquidity here, 87.25 and even 88. We're getting our buyers. Getting a little bit of a skew here on the bid. All right, yeah, looking better. Okay, let's see it now. Now we have to be really careful with this. It's not the best. It is partially doing what we're looking for. So we're still looking for 88.50 here. Okay, but due to that not being the clearest setup, we have to be careful is that this trading here by the aggressor can be the fuel for the stop run into 85. Okay, this would be your trap volume. And that's what we have to be careful about. Okay, does that make sense? Because we're looking for it. It looks better than not to trade up into 88.50. Okay, that's it though. That's all we got going for us. But that's what we're reading. But if we look back at some of the price action previously here, and let's clear our drawings, we noted that there was just stop run on each swing in this kind of range here. Stop run, stop run, stop run, stop run. And then also stop run here. And then continuation. Okay, so let's see, that leaves us back in here, and we're looking for that move to 88.50, and we're at 88. Okay, yeah, sorry, Stephen, you want to look at Market Pulse? No problem. You're not going to be able to hear it in here though. In Discord, you're going to have to jump over to YouTube. Let me get to some other questions here. Let me load our Market Pulse, and then we'll look at get to some questions in here. Guys, another thing that we covered yesterday I'd like to revisit again was talking about like these kind of shift moves away from a balance area. We've called it, like I said, for years we've been calling it like who's in control, and it truly is that, but we'll start to identify it again in here once we get to this Market Pulse. Market Pulse. There it is. Okay, so I got price change, volume pressure, imbalance, and volume pressure. Okay, is that the one? These are the ones you want me to look at, Stephen? Let's open them up. Yeah, let's look at those. Yeah, these are great. I really like the Market Pulse tool a lot. A lot of you guys do. So here we got volume pressure by buyers and sellers, volume pressure imbalance, which is buy minus sell, and then we have price change, PC here. Okay, price change. So price change. Now all of these algos in here, I'll just right click on here and go to the settings. All of these algos in here are derived off of, I mean, they're looking for different things. However, there's a look back period called a training period here. In this case, for our volume pressure imbalance, it is 5 minutes. So it is a continuous sliding window of 5 minutes of data that these calculations are based off of. Okay, as soon as the past 5 minutes goes outside of that calculation, then it's not in the calculation any longer. And there's a half-life period too. What this means, and it's every 10 seconds, it means that this will reset half the life after 10 seconds. So suppose, for example, we have a volume pressure imbalance here of 100. in the last 5 minutes, let's say we've got 100. In the next 10 seconds, it will reduce down to 50. Okay, that's the half-life period. Right? If no transactions take place within 10 seconds, it will go back down to 50. And if within another 10 seconds, if no transactions take place, then it will go down to 25. Right, so it's always going half the distance. Right, so that's how the calculation works, and these are very, very simple, but very, very effective here. By understanding these imbalances in here, and let's take a look at this. All right, so here's our order book skew. Here's our aggressors. Now we're looking for our 88.50, and yeah, nice and balanced here at like 87.50. Yeah, we're starting to see our aggressors. All right, so looking for a 88.50, and then I think we can also get the break here potentially, and then a move on up into maybe next level up here at 89.50 or 90. Liquidity is at 90. All right, now let's listen to our volume pressures. A price change is very little right now. That makes sense. Okay, sellers hitting the bid. All right, so Stephen, I don't know if you're hearing this over on YouTube. You're going to have to jump over there to hear it. But you can see when the threshold is crossed, though, right? And that's when you're going to get a sound notification. The little white lines here, and here, these are the thresholds, which is at 70%. So if it crosses that threshold, then you will hear it from the market pulse. And we're not hearing anything. Pretty dead. Now, this is another thing. Think about this here. Look at, we're hearing the selling coming in here. And it's trading into high liquidity here. We see a price movement because it's been wrapped in a really small range in here. So it is moving. Okay, but when you maybe hear this hitting into an area and you hear a lot of selling, but it's not going anywhere, well, that's because there's going to be either a lot of limit buy orders here, and or together with icebergs. Right, so here we go. Here's stop run. We're back up above it. Buyers here. Okay, this is one of my favorite kind of setups here. I look for, and they're pulling here. I'm looking for this to come up into 90 now. I'm looking for extended move here. Now again, it's not a trade recommendation, but here's what we got. Here's what we have. We have our sellers. We have a stop run, and we're back up above it here. Okay, and we see the buyers up here. Now, I want to see, we got to get more buyers up here. That's just not enough. Okay, but it's set up here for the move up into 90. Okay, so we're looking for the stop run through high liquidity and then the buyers to come in and then move it to the other side of this range up here. Okay, and this is our kind of pivot point here. We get sellers back down below this, then look out. You know, it's time to bail on that idea. Okay, order book skew underneath. Let's get some more buyers here. That was short-lived. Some algorithmic buying in there, it looks like. A bit more. And let's see you sweep the order book buyers up into our liquidity here at 89.75. Okay, as the potential scenario here. All right, let me get back to, there's a lot of questions over here, it looks like, in YouTube. Yes, lots of questions. James, we prefer Rhythmic compared to CQG. One of the really, there's two big reasons. The first reason would be that I still quite don't understand which markets offer full depth of market from CQG, and you know what I mean there. If you look at the the S&P, they offer it now, but if I zoom vertically here, look, there's there's 20 contracts up here at 51.25. This is live. They are up here. They are providing liquidity way up here, right? So that's full depth of market. A CQG in a lot of markets, they will only show something like this. Let me show you. They will only show you 10 on the offer and 10 on the bid, and that's it. And now I don't know which ones they offer. They used to have full depth for crude, and now they don't. Or the last time I checked, they didn't. Okay, so anyway, that's one advantage of Rhythmic. Okay, the other advantage of Rhythmic is they offer the market by order data, and CQG does not. Okay, so these stops and icebergs that we've been going through in here, understanding the details in there of specific players and other order flow phenomena in the auction here, that is not available from CQG. Oh, okay. Thanks, Luis. Yep. Answer that for me. Anonymous trader, why does price move away from BBO sometimes? Well, I mean, it never moves away from BBO. I mean, best bid and offer is best bid and offer. I mean, that's the most inside market there is. It has to always be on the best bid and offer. I think what you mean, like, why does it move away from certain areas? Why does price? Well, this is why, and this is auction market theory. Is that what you get is a lot of kind of back and forth and sideways action, and then something happens in the market, and you get, like here we have the potential here for lots of buyers in here now, right now, to move this market up here and to pull away from this previous value area here. And what this is called is price discovery. Okay, outside of a range, and to see if where price might go and where it might accept. Okay, and that's where Bookmap really shines, because you look for where it might go is it's going to go to the sellers that are up here at 90.5. Okay, that's it, because that's where the liquidity is. Right? If we can get that price discovery and extended move here. Okay, and that's what we talked about yesterday as shifts in the market away from an area, and they happen pretty dramatically. It's kind of like a catastrophic shift with a lot of stops also being triggered. Okay, now see how the shift is actually, as for what we know right now, it is actually starting to play out. We have them bidding up here We have traders bidding at 88 and offering up here at 91. Okay, so this is basically demand. Well, it is demand, right? And do they stay in the market and do they get filled? And are there not enough sellers to want to trade into and through this? If not, and we start to find buyers, well, then we're looking for buyers to trade up into the sellers up here in these areas. Okay? This is a good example of that skew in the order book. Previously, the order book was sellers here, buyers down here. Sellers here at 88.50, buyers down here at 85. Now we have buyers here at 88 and sellers here at 91. That is an order book skew that we were looking for yesterday for a clear example, and we didn't really get. Okay, so this is playing out pretty nicely so far. It's just gone up into this area here, but we still see some. See how the order book kind of shifted a little bit here, right? See them come in at 90 now, whereas before it was here at basically 91, and now they're starting to show a little more supply here, a little bit lower here. All right. Andre, you want to look at Bitcoin? Sure, we can look at Bitcoin. I'm not much of a VWAP trader. If you have, I would say this though: if you have your VWAP studies, and this is something you want to you follow, then great. Just make sure to get the most out of Bookmap is to line this up with some of these ideas and concepts in order flow. Like for example, this is pretty good here. Okay, a trade into VWAP and clearly a break of it. I would love to see VWAP not kind of go up here, but I mean, due to all that volume, it has to go up. And then have it retest back here and VWAP be support. Okay, but VWAP is kind of acting as resistance again. This is why I'm not much of a VWAP trader. So instead, I look at supply and demand or support and resistance, and here's why. Instead of a line on the chart, I'm looking at this move and then look at the retest to where those buyers came in, and that is the support here. Okay, now I don't see too much demand at that support level, but it is a support level, okay, based technically on the chart. All right. This is still bullish here due to this strong move here. Okay, which is obviously like we're going to see massive liquidations here, 168K, and also our cumulative volume delta spiking here a lot. And now it traded all the way back down here. And we're still bullish until we see something else. Okay, that's the read right now. If we have enough buyers in here, well, then this is where we would want those buyers to test the sellers. This is where they dropped it, right? From this point, right? But here's our market structure here. It's really at this 29,240. I hope that makes sense. Mark, you have Global Plus and DX Feed, but don't have the option for icebergs and stops. That's correct. You won't because DX Feed does not offer the market by order data. So if you're interested in that, you'll need to reach out to. Well, you'll need to cancel your DX Feed subscription and then subscribe to Rhythmic. They're roughly the same price, right? So. You can go to our Bookmap marketplace for that. And then let me show you also the Learning Center. Okay, from bookmap.com, click on the More button, go to the Learning Center here. And then in here, get connected. There's all sorts of great videos in here, comparing the data in here, stocks, futures, cryptocurrencies, subscribing to the data, and then also connecting in here. Okay, so these videos will really help you. Okay, so I would suggest that you watch some of these in here. Okay, want the US futures, and then subscribing to Rhythmic, right? All right, guys, well, look at that move down into liquidity here at 88, and it's holding. There's our demand. It hit it, and now we're looking for our supply to be hit here. Looking for those buyers. We have a little bit of a skew in the book. We need a few more buyers in here, and we can trade into 90 on up to 91. Okay, now look at the buying up here at 90. That's pretty horrible. So we're coming back up to retest this area here at 90. We've got to see some pretty big buying in here from the participants, okay, to trade into 90 and then try to trade through it. So we'd be looking for those big green dots up here, and then for the market to pull higher. Okay, pulling liquidity here at 90. That's a good sign. And we didn't get our buyers. Okay, I mean, look at the buying here. We want to see this big red dot. We want to see a big green dot like that, or even bigger up here. That's what we're looking for. For that market to go higher in this scenario. Thanks, Luis. God, I should just read ahead in these questions. You're answering them all. Nice. Thank you very much. Yep. Excellent. These numbers to the left of price, we have a video on this as well. It is showing you the accumulation of these are the last transaction basically, but it'll accumulate here at one price level, and maybe the best bid and offer switch, but it's still only at the same price level, and it will still accumulate. So that's what this is showing. So the white number is the accumulation, and at that one price level, and the colored number here is showing you the last transaction on the best bid or offer. Okay, if it's red, it's on the best offer. If it's green, it's on the best bid. Okay, so I can show you how that works here. You'll see the transitions here. So here we have a 128 and 2 was this last 2 was right here. Oh, because these went out of the window. Okay. Yeah, I have to show it here. Okay. So here we have one transaction here, right? Aggressive market buy. So green, it's 1. It's 1 and 1. Now, as we go forward, that was the last transaction. Now look at this. Well, we have 3, and it's on the best bid. So what happened here? Okay, so why is it 3? Right, and if we hover over this dot, it tells us volume of 3. Okay, no, I'm sorry. So yeah, so but it's if I include this dot within the area here, you can see that it says actually 4 and then 3, right? That's what's going on. So because it's at the same price level. Okay, guys, we're seeing a nice, this is our breakout move. We're probably up into 92, 93 at this point. Let's take a look. No. Well, we made it up through 90. up into 91. Anyway, let me show you. Like, it just takes. I mean, I can go through the example again. Let me show you though. There's a video on it, and that's the best way to describe it. Okay, if we go to the Learning Center, then go to Getting Started here. This is how to use and learn how to, the different functions and features in Bookmap. And then we're going to go over displaying elements in here. I'm sorry, we're going to go over volume. Okay, and then we're going to go over the last traded aggregation here, this one. Right. Let me put this into the chat for you, and this will answer your question. Okay, it'll be more succinct than me answering it here. All right, there you go. Carl, that's for you. Okay, I think we're all set. We're all caught up on the questions over on YouTube. And how about Discord? Live slow, amigo. Steven, no, it should be working in real time. I mean, should be fine. Give it a try. This is a great tool. I mean, God, you can almost just listen to these things and trade by audio. And what's interesting about it is hearing how the market transacts as well. Now, this tool here, we're looking for momentum here, for example, right now. So we got to hear those buyers come in. Okay, if we don't, we have the potential for this to fail, and we will hear sellers come in, and they're going to trade it back down to 90, or maybe even, back down into the lows here in this swing. One of the great uses of this tool is not just these 3 or 4, 5 indicators for just one, or algos for one instrument for the ES. It gets really interesting when you start to use these for correlated markets. So you might want to look at the NASDAQ and hear the NASDAQ start to tick off earlier, and then you can jump into your ES trade. Right, because you're looking for them to be correlated, and one is usually leading the other. Or maybe you're looking at the dollar, or the euro dollar or something. Does Bookmap offer a look at all exchanges? Well, yeah, we connect to Eurex. I mean, go to the Learning Center is the best place, really. And then under the Get Connected here, go through these videos about the subscription to data in here. Okay, this will answer your questions. All right, well, we didn't hear those aggressors come in here, but we're moving higher. Okay, we're getting our price discovery and looking for it to continue into this liquidity here. You want to look at you're looking at gold USD. That's a kind of an exotic cross in the forex market, spot forex. We don't offer that. We can look at gold futures if you want, but we don't have it up at the moment. All right, you want to take a look at gold? Sure. Just want to go over one more point here before we do that. Deborah. Deborah, yesterday we covered this a bit. You know, we've talked about who's in control and moves, but we're just going to kind of describe it a little differently in terms of price discovery, and we're going to in auction market theory, this move here, right? So this is who's in control, and you had talked about like my entries are the worst. So let's take a look at this here. Price discovery and then low volume pullback after price discovery. These can be really great entries, okay? Because we know who's in control. And then you look for that pullback. Now, if you are looking for a pullback all the way to here, you would have missed it. Not one transaction took place. Even if you had your buy limit order here at 90.25, you might not have gotten filled. Okay, chances are you probably didn't get filled because you're probably at the end of the queue in the market. All right, so you're going to have to be up here, basically. You're still getting a discount on the pullback, okay, but that's your risk on this, right? So it depends on, you know, your style of trading. I like to look for these aggressors to come in and trade through it, maybe take some off at the top of the range, and then look for a pullback and scale back in as a possibility. A lot of traders, I mean, just keep it simple. They look for who's in control, look for a pullback, and get in. That's it, right? So this can help with your entries tremendously. Okay, so look for that move to unfold, and then look for maybe the pullback here. Okay, so now we're getting our aggressors again on the buy side, back up here. I'm still looking for them to trade up into this liquidity here. Okay, 92 to maybe 94. Seems to be buyers' interest here. Here we go, Deborah. Here's another move here. Here's your pullback right here. Okay, it could pull back to 91. Could, it didn't. Okay, and you wouldn't have gotten filled here at 91.25. You wouldn't have. You would have been left. Your order would still be sitting here probably. All right. Well, that's the kind of risks or conditions with a pullback. Okay? At least in the short term here. Longer term, you know, maybe you just don't care. Longer term, it's like, yeah, I can give it a few points. I don't care. Okay, some gold futures, then we got to call it a day, guys. This is the August contract. Is that one? Is that what everyone's looking at? Let's take a look here. Yeah, seems to be. Yeah, August. Okay, well, beautiful breakout on gold into high liquidity here, here, and then up here. Pull back. And then we see that those buyers come in again here. Okay, so here, see where the sellers came in this area here. It's a kind of a funny pullback. I would look for it to come back down into here, but it came back down to this liquidity here, and that's actually kind of bullish. Once we start to see the buyers back up above it, we look for the break. And then yeah, so far it's pulled back again. Okay, so this is your pullback again right here in gold. Okay, then we look for more aggressors in here. Now let's look at the order book in here. Well, there's more supply at lower levels in here. That's not too bullish. Okay, at 65.20 and 50. So be careful with that. And you can also look for a catastrophic break here, actually. It's been a really nice trend here. Beautiful trend, right? And it's starting to break it, so be careful with that. All right, well, you can see what's happening. They pulled. We're getting our aggressors. They're adding on the bid. We've got to get through here. It's 65.50. If we can, next stop is 66.20. And yeah, I would, this looks pretty good to play out immediately, to be honest. Our S&P is starting to kick off again. Let's take a look. All right, finally our S&P is trading up into that liquidity up here. Yeah, hold on a minute, guys. Hold on. All right, sorry about that, guys. Let's see here. Where do we leave off? So we left off here with finally our liquidity trading up here. And let's see here. Am I broadcasting still? Yeah. Okay, we're good. All right, guys. Well, anyway, let's we're going to end it here. Guys, please hit the like button if you like this kind of education, and or reach out to us and suggest what more you'd like to see here. We're trying to cover this in the most objective way so that you can understand the market behavior in the auction process and gain insight from the trader's behavior here. Okay, and we can even drill down into specific behavior from larger players in some of these cases, right, with the stops and icebergs, and really understand some of the details. All right, so anyway, yeah, please hit that like button, and let's I want to end it here on something. Like Deborah, we talked about these sweeps or who's in control in some of these moves in here and your pullback trade, but you got to make sure you know who's in control, right, for that pullback trade. And that pullback trade is, as you can see, it's not so easy. You're not going to be getting in at these beautiful pullbacks to exactly where it broke out from, but that's just part of the trade, the setup. Okay, and in a lot of these areas, you'll get exhaustion down on some of these lows in here. You would have probably you might have gotten filled in here. You'd have to get filled here, but you're giving up a couple ticks in here, right, on a very small move. Now, again, if you're looking for larger time frame moves, like this is your pullback into these areas here, a couple points, who cares, right? Wow, this is turning into a really nice move, guys. This is your big stop run, though, through that area. Okay, so are we accepting or rejecting above or below that stop run? This is what to look for here. All right, so this is the stop run, and this is where it would reject, would be below that area. Okay, so look for that potential strategy here. All right, now what I want to end on here is the bigger picture, right? And let's take a look at it. All right, so we didn't look at it earlier, and we should have. But the bigger picture here is on the daily chart here on the left. Okay, so yesterday we came back up. We tested these highs here from Friday, and it rejected a little bit, and it just came back down. And then today, we can see what this was a wick actually in the pre-market, and it was trading back down into these areas in here, and now we're back up here, and we're above the swing. And there seems to be still more buying pressure. Okay, so we just outlined this stop run here, and we look for that potential scenario for this to be a blow off top or capitulation, and then a move back down in a mean reversion trade, basically back down to maybe a high volume node, or there's, high volume node, low volume node, whatever. Back to where though? Okay, well, let's just mark that up quickly. Back to where? Top of the range here would be a good area. Okay, there's another range in here, or maybe it just, it'll come back down into the swing lows down here. Okay, so around maybe 86. Right now, within this traded range in here, we could also get a move back down in kind of the middle of that range, or a high volume node, which would be here. Okay, so just mark some of these areas up and follow them. Put together your plan by understanding some of these levels, and if it's going to pull back and trade to them. All right, but that would be the first is going to be the exhaustion up here in the move back down below this 93 3/4. Okay, and look for those sellers to come in hand over fist. Okay, now if we don't get that, and this accepts, this is not only is it a stop run and blows through all these areas here. However, price accepts. You still find buyers up here. Well, then we'd look for maybe it chops around in this whole range for the rest of the day. Or maybe we get more buyers back up here at the top. Then we get further price discovery up into maybe 98. Okay, or maybe 4,600, the figure up here. Okay, there's high liquidity up there. Right, so these are some of the things to consider in your scenarios and looking at the order flow. Okay, and we're also extrapolating or referring to and getting insight from the higher time frames here as well. Okay, but it's the order flow is going to confirm it for us. All right. Thanks, Rob. Yeah, leave some thumbs up along the way out. Let's see, Sebastian, you're welcome. Next stream will be on Friday, but there's all sorts of other streams like I had mentioned earlier for the rest of the day, okay, every day. Right, so go over to our Discord channel or our YouTube channel, and you'll see the others in there as well. Okay, thanks everybody. Have a great day. Hit the like button, and we will see you on Friday then. Okay, all right, take care. Bye-bye.